Welcome, traders, to After Hours at Traders Post for Friday, March 6th, 2026. I'm one of your hosts, Peter Bad Guru Hartman, creative specialist at Traders Post, joined by Tom Sacred Profit Prop Firm Payout Poppy Hartman, marketing manager, to break down the market madness. After Hours is your weekly look back for retail traders, where we break down what actually moved markets and how the cleanest trade setups played out or didn't. Oh, wrong person. We don't want to see him at all. We hit the macro drivers when it matters behind the week in dollar, equities, and policy terms so that we have an idea of what to look for in the week ahead. After Hours is brought to you by Blue Sky, the best-in-class prop firm with same-day activation, daily payouts, and no max restrictions. We'll tell you more about them later. Tommy boy, Tommy mommy, how are you doing, sir?
Me want for you to know that when the markets close down upon the day, that the selling ain't over. Lord Almighty, next week we're going to see a red wave. Just trying to get a broader audience over here. Get some of my brothers and sisters from the Caribbean here upon the trading floor. Blup, 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 blup.
Blup, blup.
Peter.
Yes.
People actually thought today the bottom was in. We're pinned here. We're going to rise higher. We're going to get all the way back up to, head towards all-time highs. Look, we know all the things that are happening in the world and what's going on with markets, but the lows are in. That's what people thought.
Yeah.
People thought. How wrong are they? Peter, look at this chart. Look at this chart of M and Q. All right? This is what happened in the overnight.
Mm-hmm.
Remember, we had this big rally yesterday. Thursday at close, and then again this in the early hours in the morning. So people thought, oh my God, there's a little blip. They were calling this a low, higher low.
Mm-hmm.
Call this a higher low.
Isn't that what it is?
Yeah, I know it's a higher low, but they're using this as okay, and we're done with this. Excuse me. No. I don't know who told you that the stock market would still fall. Who called it? I wonder. Oh, yeah. All right.
In the chat, just before we go further, Trey's in the chat. Yeah, I made it to a live one. Good to have you here for a live After Hours. Mr. Cleo is here. Mr. Cleo, is that you, Mr. Cleo? Good to see you. Is that the Caribbean flavor that's got you?
Oh, Miss Cleo was the prophet from the oracle from when we were younger.
That's true.
So I'll be Mr. Cleo.
She was really good. She said that I would meet someone, and I did.
Only cost you $9.99. All right. So when we take a look at a chart like this, Peter, just something to point out. People, you got to keep this in mind. Mm-hmm. We are Friday. All right.
Yeah.
So people are preparing. You got to get your head out. The market's not full of prop firm traders. Okay.
Mm-hmm.
The market is filled. The main movers of the markets are large players, hedge funds, pension funds, sovereign nations, big money players that are moving billions of dollars. And It only takes about $50 billion to move the stock market like 1 or 2% any given direction in any given day. All right. and the option space and the derivative space, futures and options, notionally control way more than that. All right. And so when we're seeing moves play out in markets, forget the little squiggles in the intraday. What really matters are these long trends, these positions that sometimes takes days, weeks, months to get in and out of. All right.
You're talking
And
about forced buyers?
well, even just regular buyers and sellers,
Mhm.
when we're looking for longer term trends, we're looking for what the big dogs are doing. All right. So get off your little FinTwit thing of what your trading group is doing and what these small people are doing. All right. None of that is really moving the market long term. All right. We're dealing with bigger things over here. So when the market closes at the lows of the day, right over
Mhm.
here, we have MNQ at 4 p.m. We close at the lows of the day. What it usually means is that the selling isn't over. That the large players that needed to get out are just easing their way out of it.
Mhm.
All right. And the way you can sort of tell this is because of VWAP, right? We titled this video The Best Way to Trade NQ. The best way to trade NQ, especially when you're looking for longer term trends, is to see what is VWAP doing. Daily VWAP, weekly VWAP, monthly VWAP, quarterly VWAPs. Why? Because VWAP is one of the a main tool or a significant tool used by large players and institutions in order to get in and out of their position. How do you know you got a good price? Is if you got it on the good side of VWAP. If you wanted to sell, you want to sell above VWAP. If you wanted to buy, you want to buy below VWAP. Then you know you're getting, hey, on average, what's the price I'm getting? I don't want to overpay.
Can I say one thing
Yeah, go
before
ahead.
we move forward? Maybe I shouldn't because it's in the upcoming Alphas interview that I'm editing. Um, what's this gentleman's name? T-Made. He said that people see VWAP as an old person's indicator.
It is an old person's indicator.
Like they
Do
think
you
it's like
know?
no longer, it's like old timey, like, oh, you're still using VWAP. And he's like, if you have
Sure,
one indicator, you should have a VWAP indicator. And you could probably be profitable with that.
sure. So the institutions
Mhm.
are made up of old timey people.
Yeah, so's the government, apparently.
All right. They're old timey people. The president of the United States is not a spry chicken. All right. Not a spring chicken. So it's old timey, yes. But you're seeing here, let's say we just remove my other indicator, we just see VWAP levels over here. Let's show a weekly. Is this the weekly? No, that's the 2 hour. Let's
I
see.
mean, calling your levels indicator a VWAP is kind of not fair, no?
Well, we're just going to see the VWAP levels here. I'm just going to hide some of the stuff so you just see purely VWAP. So let's hide the lines on this one, and we're going to hide the lines on these guys.
Trey says, who cares if it's old if it works?
That's right.
I agree. I agree.
All right. So looking at the chart over here, let's even make it even easier to see. All right. So the blue line you're seeing is the daily VWAP, the overnight VWAP, and then you have the red one that's the weekly VWAP. All right. So when you see price oscillating around here, when you see price oscillating around VWAP, these are institutions that are pushing in and out and in and out, in and out, in and out of the position. Now you'll notice that we've been pretty choppy around these areas for the last several weeks right now. Right?
Mhm.
If we head over the 2 hour chart, you guys are going to see that we've basically been in a topping pattern for a while now. Since the high here of October 30th, 2025, we've been in this consolidation range. All right. But as we zoom in, this consolidation range, guys, we have this part over here that lasted for about a 3 months. And now we have this consolidation range, which is lower. All right. So you want your higher highs and your lower lows and all that. This is a lower high as far as the consolidation range is concerned. And you'll notice that this range lasted for about 3 months. And this range is lasting for about a month. And I believe we are near the time where we're going to break down in this range, head down towards this VWAP level, unmitigated VWAP level of 24,000, and then we're going to start the down run, right? Because if it took 3 months for us to consolidate over there, and then a month afterwards, I'm expecting about a week of consolidation around the newer level, around 24,000, and then another drop significantly lower in after that week is done. All right, we're about to get Peter. We're about to pull back. Where do we think we could pull to? If we took a look at our long-term moving averages, I would see 23,000 as easy,
Shut
an
the
easy
front
drop.
door. Shut the front door. Okay, I have a question about this because I heard you say this, and I'm not sure if you said this on the Sacred Profit YouTube channel or Traders Post, but you said like when something happens in like threes, everybody's expecting that third one,
Yes,
so it probably won't happen.
correct. Or it
So
happens
if
faster, or there's more volatility around that.
so you drew one box and then a short box and then the smaller one you're expecting to go down. Why are you so confident that it's going to play out as opposed to the market seeking to inflict the most amount of pain?
Well, it can. That's why we can have a rise up, right? In the same way that we had this rise up here, this peaked out into the new all-time high in October, and then crashed down lower than it even was before, and then it settled into this consolidating range.
Right.
That sort of thing happens all the time. When it went into the next phase, it went up dramatically, where people thought, "Okay, that's it. I think we're done. We're going to go to all-time highs," and then fell lower than it was before. So this could totally rise up to over here and then fall down pretty dramatically.
That rise
So
would correspond to what percentage?
it's hard to say. There's no number I could really place on that. What I
But
would
what's the
imagine
number you
is
can
that
place on that?
I would say we rise up maybe to at the nearest unmitigated level. So let's take a look at our nearest unmitigated level there. We have dun, 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 we have 25,560 as a level here that has not yet been cleared.
Hmm.
So I could
Interesting.
totally see that we rise up dramatically and then suddenly fall down. Remember, crashes happen when everyone's on one side of the boat, and rallies happen, which are reverse crashes, happen when everyone's on the other side of the boat. Because what happens is the buyers and sellers are in the market, and then when they all are all on one side, and then the ship tilts, a lot of those people become force buyers and force sellers. They don't have
That's
a
really what
choice.
you want to be playing. You want to be playing against force buyers and force sellers. You're not really trying to trade sentiment or narrative or the news. You're looking for what's the move that has to happen or is most likely to happen under these circumstances, as opposed to vibes.
Modification for that. It's
Yeah,
more about if this move happens,
mm,
what then will force buyers and force sellers have to do?
right. That's what I meant.
Right. So the problem that a lot of people get into is that they try to predict this is the path that it'll take. No, no, no.
Mhm.
Just go, hey, these are the four paths, or however many there are. What trade can I do that satisfies the most of these paths? And then place your bet accordingly.
Interesting.
That's how I think about it. Now, why am I so confident of a drop? Is because things are playing out in the way that one of the paths I was expecting has played out.
Mhm.
We're getting the highs where we expect. The periods of consolidations are happening in the periods we're expecting. It happened in 3 months, 1 month, and we're now at the end of this 1 month. We got bombings in Iran. We had bombings in Ecuador. We had all kinds of things. Like you wonder yourself, how is it possible that volatile events coincide with technical analysis on the charts? It's because there are gremlins and gods within the charts that can actually modify and affect the future. No, the charts are an aggregate of information, and that aggregate information is we're cyclical beings, and so we end up in a situation where things will happen on the chart right around the time where things happen in the real world. Case in point, today we had the jobs numbers come out. Right, we had ADP come out, we had unemployment rate come out, and these were pretty disappointing. How
Really?
disappointing? You'll find out after a word from our sponsors.
This episode is brought to you by Blue Sky. If you're looking for a prop firm built for real traders and that's automation friendly, meet Blue Sky. And when you pair it with Burr, use coupon code WELCOME26 to get 50% off your launch plan. Get funded with Blue Sky, execute with Traders Post. Sign up today at bluesky.pro, that's BLUSKY.pro, and plug in your edge. Trading involves risk. Use proper risk management.
Before we get to the unemployment number, which is pretty bad, let's take a look at the trading activity for the day. All right. Now, you guys have heard me talk about this for the last couple of weeks, and you guys have been hearing me about it on my own personal YouTube channel, Sacred Profit, if you're interested in that. But essentially, we had the 6 o'clock move that happened again. And what is the 6 o'clock move? This is the idea that the price will move after futures open. It'll at some point move towards the the closing VWAP price from the day before. So the day before, VWAP, overnight VWAP closed around here, around 25.15, and the overnight VWAP closed over here at 24,983. And so the idea is that we think, okay, at some point the price is going to come to that level. Now you'll notice that when the price closed yesterday, it closed right around that level. And so very often we can't clear that level right away at between 6 and 7. We're too close to it. What the price needs to do is move away from it and then come back to it. And that's exactly what happened. The price drifted away from the unmitigated VWAP levels and then came down to it. All right. Now you'll notice here, the price moved very predictably in a sense, or rather, as we look at it in retrospect, we can see why it's moving this way. The price, as it moved up, we're going to take a look. Remember, I said the best way to trade NQ is with VWAP levels, but that's not just with the daily and weekly VWAP. You can also use lower time frame VWAPs. Here, we're going to take a look at the 2-hour VWAP, which are these purple lines. You'll notice here, this purple line is VWAP. All right, the 2-hour VWAP. The price, the open VWAP price. One more time.
You're talking about the vertical line or the wavy?
Both of them. The vertical lines are every 2-hour bar time frame, and the purple plots over here, these are the 15-minute, these are the 2-hour VWAPs. And then these lines here, these dotted lines here, are the 2-hour, the closing price of VWAP for that 2-hour time on the previous 2-hour bar. What happens is that those levels here, where we're seeing here, the price will revisit it often. Here we see that right at the open, the price came and revisited that line right here. And it used that as a stepping stone to move up, over, and it came back. And at the next 2-hour, this is the new line that showed up. The price came down to that level, consolidated a bit, and then rose back up. And then it came back. And every 2 hours, a new level was created. These new levels were created. These are 2-hour VWAP levels, right? They were created. And the price kept coming back here to revisit it. It used it as a stair step. But notice this last 2-hour here at around 2 o'clock in the morning before the London Open. What do we see? We see this 2-hour level that was created. Do you notice how the price opened up on the 2-hour bar underneath? That was our first signal that we might actually close underneath. That this is the first signal that there's weakness now in this stair-stepping pattern. Over here, the price closed above the level that it created. Here, this candle closed above the level that was created. Here, the candle closed above the level that was created. But this one, the candle closed below. And the level is created above it. So what happened? The price first went up to go clear that unmitigated level and then came down. Boom. This breakdown over here, second sign that we're going to fall. It bounced off the daily level, rose back up, then fell again. Now with momentum to break the daily level. This blue line is a daily level. It came down to break it. Great. Now, you might have made the mistake, or some people made the mistake of going, okay, this is it. Let's go ahead and short right now in this.
Why are you attacking me? I don't understand why you're doing that.
Well, what happened in the next 15-minute candle? The price reverted, right? It went all the way back up over here, right? And then some people over here thought we're going back above the daily VWAP level. Let's go long again since we've been long all night.
Don't just he keeps attacking.
And the candle closed back here. This is the third sign. Once we broke down below, this is a confirmation that there's downward pressure on the price. And then right on the 2-hour candle, right on the nose of the 2-hour candle, we give up the ghost. We fall. We fall to the level that we were talking about, the previous VWAP from the day before. That's exactly where we fell. Then we bounced a little bit and we continued falling. Where? To the session VWAP from the day before. We even bounced back up in order to confirm that level. Then we fell again. Where? To the 2-hour level. This is the last 2-hour level that was created the day before. Right here, right at 4 p.m. on Thursday. That's where it fell to. And it bounced. And we bounced back up to the 2-hour VWAP and then rolled over. Now you notice I've just been describing the price action in terms of VWAP levels. We're talking about VWAP when the time frame is created, so at the beginning and closing of 2-hour and daily candles. We've been talking about the plot of VWAP, like the calculation of VWAP in that time frame, and we've been talking about the price of VWAP that it previously closed at. And you'll notice that we can see the whole story of it working in terms of VWAP. Even as we continue, we find that the price came down, and where did it come to? To the weekly VWAP. That's where it stalled out. Once it was done there, what was the sign that it was ready to go back down? It came twice over here. This is a 2-hour level that it hit and then fell. And then this is a 2-hour level that it hit and then fell. We're just bouncing between VWAPs here, folks. It's so easy. Where did we fall down to? We fell down to the next 2-hour level, VWAP level that was created a few days before. That's exactly where we fell down. In fact, this whole level over here even coincides with 2 days ago, the VWAP levels from that day. That's where we fell to. Then today at US Open, we rallied. Where did we rally to? Up to the weekly VWAP. And we never actually crossed above it. We never actually made it anywhere higher than that because of all the downward selling pressure. So what do I look for, Peter, in a day if I want to look for a trend? How do I look for a trend inside of a intraday move?
VWAP level to VWAP level.
Right, those are my targets, but there are certain times of the day that I'm looking for.
Oh, yes, 10, 2, 10, 12, 2, every
Exactly.
2 hours. Yeah.
That's right. So what do we see here exactly at 10? We see at 10, the trend starts, and we move up to the nearest target level, which was the weekly VWAP, which was coincidentally coinciding with the overnight VWAP, right? That's why it was so strong, because these are two levels here together. Then and then the next trend started at 2. At 2 is when we got the start of the sell-off for the rest of the day. This is why I talk all the time about time being so much more important than price. Price can give you a little bit of information, but it's tricksy. We know that these candles are pretty tricksy. They like to fool us into thinking it's going this way, it's going that way. How many people, after they saw this big candle move, the green candles all in a row, thought, hey, we're moving higher, and we ended up not moving that much higher. The prices are tricksy. Over here in this candle over here, you see how the price came down all the way to session VWAP? There are people who started shorting over here, and then they got their face ripped off. If you use price as your main indicator, you're going to get fooled. But if you use time, and VWAP is a function of time, then you're going to find your trading a lot easier.
You know what some of these candles are like? I keep following it. I keep trying to look at its signs. I keep trying to understand. This one time I was at a club, all right? This is many, many years ago. I was bumping in a club, and this girl was giving me some nice eyes, So she's like, oh, and then I give her some eyes back. She comes over to me. We start hitting it off. This is really good. She's like a green candle all the way. Then a man walks over. Turns out she's a lady of the night. This is her pimp, and I realized this candle is not what I thought it was. Okay, it's going to cost me a lot more than I expected. So sometimes I look at these candles and I'm like, what is it doing? What is it doing? And now I just assume they're all out to get me. They're all out to get me.
So that's what we saw today. And, I'm sure your other indicators that you're using also corroborated a bunch of this stuff. Like you see here, we had an over on the RSI, we had an oversold here right at open. So getting this bounce here, can totally understand that. But you don't get fooled when you're using time above price. You get to see what's actually happening.
Okay,
All
but
right.
what indicators am I going to use that's going to give me time? I don't understand. Where am I going to find these?
I don't know. I've not seen any indicators that are nearly as good
Secret,
as this.
secret profit?
My secret profit indicators, I think, are the best for intraday traders, especially prop firm traders. But hey, don't
But
take my word for it. I'm just a secret profit prop firm payout poppy.
but we've got some people in our chat here in Price Action Live who are doing well. Trey's getting close to his payout with his automated strategy. I know I'm the cloth. We got a lot of winners in the chat, so I don't know how you guys are doing it, but I do want to know, and I will pay $9.99.99 a month in order to find out, Trey. Just so you
Exactly.
know,
So that you could break even. Because
so I can break even. That's right.
all right. Well, today, finishing off here is it was a big day for data. We had data that came in. We had here take a look at the economic calendar. We can see here that we had non-farm payroll come in today, and we had reported at negative 92,000 versus the previous was 126,000 and a forecast of 58. So, I mean, I don't know what, Peter, I don't know what these forecasts are worth. I never understand these forecasts when they're off by so much. I mean, it's your job to forecast it.
This is why I don't get why people like criticize AIs for vibe coding. They're like, oh, it makes mistakes. And I mean, like, what world do you live in? Like, where's this no mistake situation going on? There are airlines where you have airline manufacturers where planes are falling out of the sky. So um, you got to accept we live in a vibe world. And that's what I
Well,
see
my
when I
line
look
in
at
the
the
sand
stuff.
was when Obamacare launched,
Mhm.
and then the website just crashed immediately, and no one
Yeah.
could. I was like, you print the money of the world.
Why can't
You
you do
literally
it?
have all the money you could possibly need, and your site crashed day one. I told my clients later on, I was like, don't complain to me. All right. Don't complain to me because your form didn't submit the thing fast enough. Okay.
Yeah.
All right. So we take a look here. More important to me than the non farm payroll is the unemployment rate that ticked up to 4.4%. If we take a look at that, that means if we plot it over the last 5 years and we take a look, that is that means the last value at 4.3 was a higher low. Guys, we've been trending up since basically spring of 2022. Unemployment rate has been going up higher and higher. Why is this important? Because unemployment rate ticking up, the bottoming of the unemployment rate is one of the final signs
Right.
that we use for recession. Recessions usually happen within 18 months of the unemployment rate bottoming historically. That's what we've seen. Now, I'm not the only one who's unimpressed by the by the jobs numbers. Let's go ahead and hear what and see what
Just
a
before
few
we
other.
do that, I just want
Yeah, let's
to
hear it.
interact with the chat here. I'm the Claw says, hope I am not late, not too late. You're not too late. Just pay your like tax. That's your punishment. Pay your like tax. Everybody pay your like tax. We had Sander Azul mentioned this earlier. I wanted to bring this up. He says the supply below is now a full-on magnet.
Right.
Then he says only negative 0.8% from ES futures 200-day moving average seems like the next logical magnet than the SPY SPX 200 moving average. What do you think?
100%. Downward targets are in the what do you call the mirror? What's it called? The windshield. There we go. Right in front of the windshield of our car. Does it mean we can't bounce? No. We're in a market high volatility and lots of news. Anything can happen. All the wars can stop suddenly. They're not going to stop suddenly.
The wars will continue until morale improves.
Exactly. All right, so let's take a look here. Just a little clip from Reuters talking about the U.S. Economy shedding 92,000 jobs in February. Let's take a quick listen.
A closely watched U.S. jobs report showed the economy unexpectedly shed 92,000 jobs last month, and the unemployment rate rose to 4.4%. The numbers hint at a potentially deteriorating labor market that could put the Federal Reserve in a tough spot when it comes to whether it should continue to lower interest rates. The results of the Labor Department's non-farm payrolls report for February surprised many economists who had forecast payrolls advancing by nearly 60,000 jobs. Corey Staley is a senior economist for Indeed Hiring Lab.
This is a report that, is clearly concerning. Not only was the number of jobs added concerning, but we start to look at areas like healthcare, an area where we've seen a lot of jobs being added in the past, also showed some weakness. Part of that was due to a strike in California. But even if we add that employment back in, healthcare was still pretty weak in terms of job gains in February. And beyond that, we just saw that pretty much across the board, jobs were lost in February. And that's never going to be an encouraging sign.
The decline was the sixth since January 2025 and the second largest. The labor market stumbled last year amid what economists said was uncertainty stemming from President Donald Trump's sweeping tariffs, which were struck down last month by the U.S. Supreme Court. Trump responded by imposing a 10% global tariff and later announced it would rise to 15%. Economists saw a downside risk to the labor market from a prolonged war in the Middle East, which is driving up oil prices and causing stock market volatility. A Morgan Stanley economist told Reuters that Friday's jobs numbers put the Fed, quote, between a rock and a hard place, explaining that while a weakening labor market would support a rate cut, higher for longer oil prices could trigger another inflation surge and therefore prevent the Fed from lowering interest rates.
What?
The U.S. Central Bank holds its next policy meeting later this month.
That's the big problem, because we've seen a drop in the market. Yes, I mean drop in the market. It's not like we're down 10%. But the oil is like at 90 right now.
Yeah.
Oil just shot up. Why? Because war. And so input costs are going to go up, which means inflation can go up. And if that happens, what are we going to do? So that's why when we take a look at the odds for a rate cut, it's still at hold, even though we're having jobs that are being shed and the unemployment rate increasing. So we'll see what they say in March.
Are you showing odds on screen?
Oh, sorry. Yeah, I'm not showing that there. Okay, never mind. We don't have to see that there. David Rosenberg actually goes on to talk about something worse that's happening here, right? He says here, Peter, you want to read this here for me?
It isn't just that non-farm payrolls unexpectedly declined by 92,000 in February, which still would have come in at nearly negative 50K without the effects of the inclement weather and striking healthcare service workers. It's the constant negative downward revisions. In fact, every single month back to January 2025 has been revised lower from the initial estimate, and by a cumulative 1.1 million. With that in mind, imagine just how bad today's number is going to end up proving to be. Whether it be the payroll or household survey, there has been no job growth this past year. And this is what the Fed describes as stabilization in the labor market.
Okay, don't be so hard on Papa Powell, okay? We know what the Fed does. Everything's fine, everything's fine, everything's fine. We fixed it. All right? So just let that be. What I think is interesting here is that I remember this summer, there was all kinds of talk from the administration, the Trump administration, about how bad the Biden administration was because of all the job revisions. It turns out there was like 900,000 or 800,000 jobs that were not there that they said was there. Well, they continued that trend and they didn't stop it. And now we're at 1.1 million. These jobs are not there. So stock market is going to start sniffing that out. And they'll be like, hey, these numbers are terrible. And if these are the number that's terrible and they're going to be revised lower, then it's worse than what we're seeing.
So Jerome Powell is going to cut, right?
Except the odds are still at 98%. It's not like we're at 80% or 75%. They're at 90%, 98%.
That he's going to cut.
That he's not going to cut, that he's going to hold.
Oh my God.
And I think it's his last one before Kevin Marsh is going to come in and replace him. And so maybe he has no incentive. Maybe he's like, hey, there's no way I'm cutting on the way out, helping Donald Trump. So politics is getting into all this. Anyways, I find it to be absolutely fascinating. This was also pretty interesting because when you're looking for what's going on in the markets, you want to see, are there any forced sellers here? Are there forced sellers that we should be paying attention to? We don't know yet, but if we take a look at the Michael Burry stock tracker from the Burry tracker on X, we see here that break-in BlackRock just froze 1.2 billion in withdrawal requests at its private credit fund. Here's what happened. Investors in BlackRock's $26 billion fund asked to pull out 9.3% of their money. BlackRock said no and capped withdrawals at 5%. Blackstone's $82 billion fund saw record withdrawal requests that same week. Blackstone had to put in $400 million of its own cash to cover the exits. Two of the biggest funds on the planet are limiting how much you can take out. Good times are going to roll. It means things are good, right? No, it means things are problems, liquidity issues, crash income in. All of a sudden, this 20% down that Tom has been talking about, not so crazy, is it? Now, of course, it's not my idea. This comes from Cam Carson. We're going to do a Carson corner, I think, next week, going over a little bit more of what he's going to say, what he's seeing over the next year or so. But he's been prophetic, and we're seeing here the top end pattern inside of the stock market. How can I be proven wrong? All-time highs. Then I'll eat my hat. Until then, I'll see you on the downside.
All right.
Supposed to play the music and fade me out there.
No.
After I mic drop.
No.
Here, how about I just slowly slide out of frame?
Look, I guess like you say, it's not about good or bad. It's just about what it is, and you can trade it either way. So I guess silver lining. I don't know. Trying. I just know every time
that in people's lives and their savings and the
Yeah.
401ks and all that. That's
Yeah.
bad.
That's bad.
But the silver lining is that you can daisy chain 50 prop firm accounts together with your Trader's Post account and make tons of money.
40, I think, is the max.
Is there a max of 40? No, I don't think it's 40 is the max. I think you can go higher than that.
Well,
Give us a call. We'll get you some more. We'll get you some more.
Yeah,
We'll get you some more accounts.
it's 40.
All right, guys.
All right,
that's
folks.
it for us
That's
today.
it for us today. Hope
We're gonna be
we're gonna
back
be back.
on Tuesday. God. Go ahead, Peter.
We'll be back on Tuesday for
Price Action Live at 9:30 a.m. Eastern Standard Time to trade in front of you using the advanced trade execution engine known as Trader's Post. We'll be back all next week. If you guys want to see some of the new features that will be added to the Trader's Post platform, come on Tuesday as well for office hours, or on Wednesday for tutor sessions where we teach you and let you know about all the new goodies we have coming for you or have already arrived. But you'll only find out the next time you load the Trader's Post app or on our YouTube channel. Guys, we're here to make your lives easier, better, trade better, make more money. We want you guys to make money. It makes us so happy to be able to provide this service for you guys. So we'll look forward to seeing you next week. And for this weekend, we wish you happy trading.